patterns which us as usually follow to make money off of it. I also backtested on Bitcoin. I showed how the market reacts um at the 61.8% retracement level after a strong deep retracement. And I also analyzed this one. I was actually waiting for the market to get to that same level. Can the market get to that place? Yes, definitely. It can. It can. A lot of others are currently in. A lot of persons are trying to hold and hold the currency to the what they call this all-time high. People have already entered positions at this particular point. Something about these institutions is when people actually have so many positions in a particular currency, they used to actually want to take out those people. They used to want to take out those people's orders. They just love doing it. So I'm definitely sure that this institution guys are currently seeing all these orders here, and they are currently seeing people stops around this point or thereabouts. So if they are going to push the market, which they are most likely going to do, they would want to push the market down to take out all these stop orders. So when they take out all these stop orders, they will now use that particular liquidity to push the market to a high point. So my swing trade setup still stands. My entry point still remains at this particular point. So if they push the market down here, take out all the stop orders, we'll activate our trade. And from there, we should have a very strong, fast rally to the upside. If you have any crypto that you bought at the all-time high or close to the all-time high, now is not a good time to sell. You understand? That's not a good time to sell. I have a particular friend, a particular mentee. She bought some cryptocurrencies during the last bull run at the all-time highs. And the market crashed rapidly. I think she got up like $5,000 or thereabouts. The market crashed so bad that her $5,000 reduced to 2,000. Yeah. Yeah. What she did, what she did was she held the particular currencies for years, like 3 years. Then after 3 years, her money grew from that 3,000 or 2,000 something to about 6,000. And then when it reached 6,000, she contacted me and sold in profit. The thing about crypto is that, yes, it can crash. It happens. Okay. But usually it recovers. So if you have any crypto you bought at this point and it has dropped to this, that, it's always very, it's a safe thing to do. Just forget about it and just leave it there till the market returns back to its all-time highs and stuff like that. And at that point here, you're actually making a lot. You just look at it as an investment and get your mind off it. So this order still stands. This particular order still stands at our 50. I think I kept 59,000 thereabouts. Yeah, still stands at that point. So the flash crash can be imminent anytime from now. And if it's flash crashes, to get us to 1.8% retracement level and reverse. Then even after getting to that point and reversing, what we are going to do is, as the market is going up, all right, as the market is going up, we will time the institutional levels, such as, when it gets to 59,000 here, activate our orders and start going up. We'll time institutional levels. So when it gets to 70,000, we'll have a sell position there, short stops, 1:4 RR, catch it. Once it gets 80,000, do the same thing. Once it gets 90,000, do the same thing. 100,000, keep doing it till it eventually reaches the all-time high back. While doing that, that should actually help us not only with the particular position we're actually holding from the 1.8% retracement level, all right, but also help us capture other profits soon as the market is going up. As the market is going up. Then there's something I'm looking at Yeah, something I'm looking at. The only thing that is actually holding me back with this particular thing, because normally I'm very heavy on backtesting. I love backtesting. Like, I can spend like 3 hours backtesting. Or I just need to just have something to want to backtest on. Now that thing is the after effects of the fundamental news. Now we know how to read fundamental news. Yeah, you've been with BTA for a while. You definitely know how to read fundamental news. You understand what CPI is. You understand what interest rates is. You understand what inflation, what they call it, labor growth, wage growth, quantitative tightening, stuff like that. Hawkish and dovish economic projections. You understand all this is actually, yeah, and their influence on the fundamental news, right? Remember when we traded AUD? When we traded AUD, we had a particular projection, all right? That's the AUD, was it interest rates? Yes, interest rates. We had a particular economic projection rather, and the market did exactly what we wanted it to do. Now, in the news came out, I knew that thing was going to sell very, very well, past what it even currently had sold. You understand? Based on because yeah, you made a prediction before the news came out. And when the news came out, I could see the result of the news, and it was better than what we predicted. You understand? It was better than so AUD was meant to gain strength, where a lot of traders are going to sell GP AUD because of the news is like this and all this. And we actually knew that. So I knew that this market was going to sell very, very well. You understand? So the good thing, one thing we could have done there, apart from entering that normal position, which is already flying in profit already, another thing we could have done is enter a standard position, a normal position, a normal sell position, normal with like about 7 pips stop loss and try to cut our TP as long as possible. And if I had called out that particular trade, it would have actually also been a very, very sweet win for us. So one thing I'm looking at is, apart from trading the normal effect of the news, which is what we do with FBS, right? Also trading the after effects of the news. So normal effect of the news, once the news comes out and is moving, within 45 seconds, we are going to know if you're going to close or not, thereabouts. Yeah, but we are going to have on that account again, less than MT4 accounts, which are going to use to trade the after effect of the news. So once the news comes out, within 30 seconds of the news coming out, I'll read the news release, the actual result, and know if it's net positive or net negative, or if it was not what we expected, stuff like that. So from that particular thing, if it's actually more positive than we expected, then we know that the currency will keep gaining strength and the markets will keep moving in a certain direction. And if it's also more negative than we expected, we also expect this. You understand? It's just a simple thing. We know that the market will keep buying, the market will keep selling based on the effect of the news. There are times when FOMC release their interest rates and the economic projections, from the economic projections, gold, not even gold itself, TSJY sold by up to 200 pips within 1 hour. Like, the economic projection was so strong that the market just kept selling, 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 selling for up to 1 hour. You get situations like that now. If we trade this way, from listening to the news, we already know if it's going to be too positive or too negative. If it's neutral or not, nothing spectacular, we just hold. But if it's too positive or too negative, we take advantage of that particular what do you call it? That particular thing to buy or sell and hold a position different from the other one we're trading. But now, what's now is restricting me from starting this as soon as possible now is this. You can't backtest on this because what I'm talking about now is the 1 minute time frame thing. After 1 minute after the news comes out, we are going to either buy or sell based on how extreme the news actually is. But then for us to actually backtest on this now, we need the 1 minute time frame. And we need to be able to go back in time, like at least 3 months, and look at all the news that came out within that 3 months, scrutinize them, and just only bring out the ones that are too positive or too negative. Then those ones that are too positive or too negative, look at how the market reacted at the close of the 1 minute candle. If you had entered at the close of the 1 minute candle, a buy or sell based on this, how many of them would you have won? And how many keep stop loss would we have to use? How many pips would you have to use? How would we have actually managed the positions and stuff like that? But if you go to 1 minute time frame, you can't go that back. It's very, very restricted. The amount of candles you can have access to. Very, very restricted. So what we just have to do is that we have to work with live data feed. We have to work with live data feed. Well, let me see. Let me see if we can check this GPAD. Look at this GPAD. This GPAD was this GPAD is after all the whole drop it did. It still came back to the 61 point. It is another thing again I'm also looking at soon. It's something again I'm also looking at soon. Situations where there was a very, very strong impact on the news, which caused the market to like sell something similar to this you're seeing here. You can see the market sold, I think, up to like 200 pips sell for thereabout. Let's check. Yeah, 200 pips. See it. This was the news that came out. After the whole sell and sell and sell and sell, you can see the market got to 0.618 retracement level. Then from that, still even sold down. You understand? So it's also something I'm still going to like, back test on over time to see how it's really going to move. So this is what I'm talking about here. So after the 1 minute time frame, from the way the news came out here, we could see from the impact, from the result of news that came out, if the stuff was very, very positive or very negative. If it was very negative, this one was very positive. So AUD kept gaining strength and pulling this particular currency down. So the close of the 1 minute candle, we can enter our position. You understand? Then hold like a standard forex position. The difference between this one and this other and that other one is that other one now you can't enter it on normal accounts, right? Because you enter it on normal account now and you predict strongly, even if your stop loss is 10 pips, they won't stop you out at 10 pips. All right, they'll stop you out at the amount of pips the market moved in. So if the market moved by like 50 pips, they'll stop you out at 50 pips. That's going to be your stop loss, not the 5 or 10 pips you put. They call it stop loss gap. You understand? So this method is actually, and that's why we actually use FBS and we put our money there. And if the trade goes against us, it liquidates us. If it goes in our direction, it gives us $400. So that $50 to $400 is normally due on FBS. If you are risked $50 on, let's say, XNES, like your stop loss went to $50 on XNES, and the trade moved against you, what you're going to see in your account is going to be minus, not minus $50, it will be minus $400. That's what I'm trying to explain. So that's why we actually use FBS like that. So this one I'm going to eliminate the what do you call it, issue of stop loss gap, which is the reason why we don't trade news on a standard account. And if it eliminates the issue of stop loss gap, that means we can actually trade it on a normal account with our normal positions and stuff like that. So the backtesting is going to help us know how many pip stop loss we're going to use and stuff like that. But we can't just only use one data to do that. We need more than one data to be able to know how many pips we are going to use and stuff like that. But this is just what I'm talking about. Something like this. After the 1 minute candle, you could definitely see this one would have spiked us out though. But after the 1 minute candle, the market has moved like this. From the news results here, if you look at the news, you can definitely see that it was too positive. So everybody, sentiments of the entire market seems to be like AUD keep gaining strength. And if AUD keeps gaining strength, GPU to keep falling. Right. So entering a sell position from the close of the 1 minute candle, 10 pip stop loss, riding it down would be a very good one. Would be a very, very good one. So maybe out of like the 8 trades that come out in a month, you know, maybe only two can be net positive or net negative enough for us to want to enter a position like this. Out of those two, probably we may lose one, right? And then we'll win one. Okay. If you are catching up to if you are doing like let's say 5 pips stop loss or 7 pips stop loss self, but doing 7 pips stop loss and trying to catch like 42 pips tipping, that'll be like 1:8. That'll be a very good target point. That's just be a very sweet way of day trading and making money without um spending much time on the charts, right? Analyzing. Just going to be basically trading and making money by just taking advantage of this news. Right. Even if we don't do that, 7 to 4 to be a very good one. Or eight, maybe eight to what's time? You'll see have time. Say 8 to 50 or thereabouts. If you can be able to, well, where the backtesting that is very useful for us now is it help us see, all right, like this is a particular situation whereby this thing actually played out here. This is one where this thing actually played out. All right. It help us see in situations where the market was like this, how many pips did the market move against before it started making its movement towards direction? The pips it moved against just give us an idea of the stop loss we are going to use. We understand. And the amount of movement it normally moved. So it give us an idea of the TP direction which we are going to use. How many pips we are going to be using as our TP in situations like this. And yet, and if we can actually use it to catch let's not be too ambitious. Let's say seven. Let's say seven to catch 42 is a very, very good one. Seven to catch 42 is going to be 1:8. No, it's not going to be 1:6 rather. 1:6 is still very, very good. 1:6 is still very good. And then we can also utilize something like a trailing stop loss by target point. We can still also do something like that. So maybe when the market is still moving like this, we can just put our SL at this half point and drag. But that one is going to be is going to be based on what they call it, backtesting results. From the backtesting result, that's when you're going to be able to see, the best way to, trade this thing. But since we don't actually have data, since we can't actually go back in time that far to analyze all those things, with this, what we just do is when we are trading, this is called forward testing. When we are trading, we're trading our normal news. Then after the news, when the news comes out, we are reading the news immediately to know if we if it's net positive or net negative. So we can actually give a bias on that. And then if it's net positive or net negative, even if it's 0.01, I use on an account, you know, with this same method, I can take a trade and see how it moves. All right. And then I'm going to observe the results. And from there, I'll be observing from real life data how it's moving. Then after like 2 months or thereabout, I can actually have data to actually like put together and bring something very, very sustainable. Very, very sustainable because sometimes this needs to be very, very positive and sometimes this is very, very negative. And if you take advantage of this, we can actually like you don't have to trade every time. All you just have to do is just even if it's 6 news in a day, you just come, stay, take your trade, catch your stuff. If it's a proper account you're trading, use your this thing 1% to catch your 4% or 6%. Next time you come, maybe after the next 4 news, you get something similar again. You pass your first phase, second phase, and like that. So it's something we're also looking at. I'm also observing there are lots of things actually to use to actually take advantage of the market. So the NFP news tomorrow is coming out by 2:30 p.m. It was um it was delayed because of the government shutdown, which we are all aware of. And coming out tomorrow, so we are going to be trading it tomorrow. So you get yourself ready. We still have like five fundamental news to trade this particular month. So either five, yeah, I think five to trade this particular month. From what I'm already seeing, they have already dropped their forecast already. And I'm going to be taking my time to go through the market and all of those things. Look at the unemployment claims for the past few months to know if I'll be expecting a higher or a lower actual result. So once I'm done with all my analysis, I'm going to know what to do. And then from it, we are going to know how we are going to trade the NFP. So as usual, we'll come live by 2 p.m. and we'll be live from 2 p.m. to 30 p.m. By 2:30 p.m., we take the trade. Before 2:30 p.m., we take the trade. Hold for 5 seconds, close the trade. Then I would go over some things again before we end the session. So remember with FBS, due to what happened with the last news, where they actually you know, push the market higher than it even moved itself to take us out. I'm not going to say take us out, to take traders out. All right. Due to that particular thing, we are not going to be using 1:3,000 leverage anymore. We are going to be using 1:2,000 to be on the safer side. So 1:2,000 will mean you won't be able to enter as much positions as you would with 1:3,000, but it's to prevent something like this from ever happening again. So you will not catch um up to 900% profit. If you win our trades, probably you catch just 100% profit. But then it puts us at a much safer distance, at a much safer position. Do you understand? It puts us at a much safer position. Know how there's no way they can actually push the market against, to take us out, except if the market spiked properly. Because so this is what we are going to. So remember this and make sure you don't put your leverage at this, just in case they want to do that thing again. So we don't get caught out again as well. So this is leverage you are going to use. And also please remember for tomorrow, remember it's fundamental news. Okay. We got our prediction right, the last one, but unfortunately, what happened. And we still have five more fundamental news to trade this month. All right. In trading, I always say it's probability and statistics. There's a probability of winning fundamental news, and that probability is usually within 30. So I was wrong with this thing now. Fast. Within 30. This is important on this. Within 30. That probability is within 30 to 100%. Yes, we've actually had 100% accuracy on our fundamental news um month before. I think that was like around July last year, thereabouts. So if you take 10 trades, you have a probability of winning anything between 3 of the 10 trades to 10 of the 10 trades. You understand? So when it comes to trading, you always want to work with low probability. So just put your mind that it's safer point. I'm going to reduce this instead to 120. But let's leave it at 30. Let's put 20. You understand? So for you to actually have the best of the probabilities, you should have a uniform risk throughout. You understand? So just in case, imagine we're taking 10 trades now, we lose the first three trades. All right. If you lose the first three trades, let's say you're doing $50, that's $150. If you've already kept aside $500 for all the 10 trades, $50, losing that first three trades is not going to sway you. All right, because you still have capital to trade the remaining ones. So even if you lose the first four trades itself, you still have like you have lost 200, but you still have 300 to trade the remaining six. We can win the next two. And because of the risk to reward ratio, which we are doing now is 1:6. Because of the, or let's say 1:7, 1:6 thereabout. Because of the risk to reward ratio now, that two trades you win in a row will give you 50 times 6, 300, 300, 600. So basically, you lost 200 on the first four trades which you lost. All right. Then on the next two trades which you won, you made 600. So leaving with a profit of plus 400. You get, but if you risk all the money in just the first two trades, gambling on, me winning the first two trades or first three trades, and we now lose the first trades, and now you don't have enough capital for the remaining ones, you're not going to be at a very, very bad situation now because after taking all the losses now, you're not going to have capital again to trade the wins that are going to come after them. So it's not going to be a situation whereby, at the end of the month, we're actually profitable, but you are not profitable. Why? Because you started with like $50, and after losing like three or four trades, you now reduce your risk to $10 because that's what you can afford. So that $10 now did not give you enough profit to cover up for the losses and give you enough profit. You get, I've seen this happen a lot of times. You understand? So just have that in mind. Uniform risk through house. Okay. So that is basically that's about that. That's basically that about that. So here's that's actually it. For the BTC trade, I'm still going to drop the entry point again on the group chat. Then when I drop it, I'm going to drop how many pips, how many dollars you're going to lose if the trade hits your stop loss. If the trade hits your stop loss. Because when it comes to BTC, all right, one thing that's usually skill people is they don't know how volatile it is. They don't know how volatile it is. They think it's like Euro USD. So once a trade is dropped on bits, they just enter and they use like 0.1. You get, but they don't know what the consequence of that 0.1 is going to be. You understand? So when I drop trade again, I'm going to drop the amount you're going to lose if it gets to entry point and hit stop loss with the 0.01 lot. So on your own, you're going to determine if you can take the trade, all right, and the amount of lot size you want to use to take the trade. So that is basically it for the session. I